There has been a massive increase in M&A during 2015, and we would estimate about more than $100 billion of insurance-focused transactions in the year up to the end of September. And that's a very large increase on the year before, which itself was quite an active year. What's interesting, though, when you drill into that, is that the actual number of deals has reduced slightly. It's down around about 5 to 10% on last year. So the story for this year really is what people are calling the mega deals. We're seeing a large driver of that as really being the underlying transformation in the sector. It is not a case that people are simply doing large deals to grow. It is much more a case that our clients are transforming their businesses, and there are many, many reasons why they have to transform their businesses over the coming years, and they are seeing large-scale M&A as one of the key enablers of that. Not the only enabler, but one of the key ways of jumping ahead. There are obviously so many layers to this point about transformation, and so many things interestingly happening all at the same time that management teams are grappling with. Of course, we have the impact of technology. We've also got very, very major capital flows around the world, particularly coming out of Asia Pacific, so China, Japan, most notably investing into the insurance sector. We've got the underlying economics of insurance business models driven by the impact of low investment yields, but also the expense base across the sector being misaligned and in many places too high compared to the product margins. So, as I say, management teams really do have a challenge in reconfiguring their businesses in that context. All insurers are facing massive project spend over the next 2 to 5 years in reconfiguring their businesses, regardless of M&A. But this can also be one of the compelling drivers of M&A. If you take two large organisations, each with a massive project spend and clear execution risk in getting to where they need to get to, then obviously it's very compelling to combine resources, reduce aggregate project spend, and ideally reduce execution risk as well by two management teams working together. Insurance executives are often asked the question that, along the lines of, your competitors are doing large M&A and shouldn't you? As so often, it's a case, I think, of if you ask a better question, you get a better answer. To our mind, the question really should be your competitors are transforming their businesses fundamentally, which they are, and shouldn't you be reacting and thinking along similar lines? And of course, management teams all over the world absolutely are. Carrying out a transaction, even a mega deal, does not of itself create transformation. Transactions simply create the conditions, if you like, for transformation to occur. So we think it's really important that management teams look very closely at what they are seeking to achieve in the long term and ensure that they are pulling all of the levers to achieve that. We are seeing the topic of fundamental transformation playing out in so many of the M&A projects that we work on with our clients. It's no longer a case that clients are simply looking at a target and asking us to do financial diligence and integration and a series of linear tasks, important as those tasks are. What we're finding is that we're helping clients to really appraise an opportunity to look ahead to what the merged entities can be in 2 years' time, and is in many ways making fundamental changes and fundamental assumptions about the future in order to help those organisations to get there.